Please give me a moment while I go live on Facebook. It'll take just a minute. Hope you're doing well. Should be live on Facebook. Hi everybody, welcome to our regular weekly videos. I'm Sami Abu Saad, Director of Education at T3 Live. We're going to go ahead and get started by taking a look at the market, and then we'll go over some swing ideas for next week. Before I get started, I have to share with you this standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. So make sure you agree to that before continuing. Also, I want to say that if you find benefit in today's video, please be sure to hit the like button. If you have any questions, reach out to info@t3live.com or leave a comment in the below, okay? So with that said, let's go ahead and get started. Here we go. First, what I like to do is go over the market, and then we'll go over the individual stocks that I like for Monday, for Tuesday actually, for tomorrow. The market, no change in bias at all. We remain all out bullish, no change in bias. Really, that's it. I don't have to say anything else. Just no change in bias, all out bullish. Extended, of course, so we can always, pull back when we're extended. Here we were extended and pulled back, right? So it can always pull back, but for now, no change in bias, all out bullish. So that's Qs, which is the tracking ETF for the Nasdaq 100. If we were to look at the SPY, obviously the tracking ETF for the S&P 500, same picture. Perhaps not as strong, but same picture, all out bullish in an uptrend on every time frame, from the monthly to the weekly to the daily. And then what you see here on the left is the hourly chart, which is what I use for swing trading. The only way I would turn my bias to bearish, change my bias to bearish, is if we, let's say, gap down and broke under this on the daily chart or under the hourly base. Let's say tomorrow we had some news, the market gaps down. Okay, no problem. I'll change my bias, but and then look for a pullback to the rising 20. But for now, barring any gap downs or any overnight news, the bias is all out bullish. The IWM is the tracking ETF for the Russell 2000. As you can see, it's showing a lot of relative weakness. It's not at the prior high. It's not at all-time highs. In fact, if you look at the monthly chart, we haven't even taken out the highs from last October of last year. You see that? So the Russell 2000 is showing relative weakness, but the market is ignoring the small caps and just continuing to move up, the Qs and the SPY. So most of the growth we've had, most of the gains that we've had this year in 2020 and also in late 2019 was mostly due to large cap growth. It wasn't due to small cap growth. You want the evidence? Here it is on the chart. Look at the IWM. Again, IWM has not even reached the highs from 2018. We're talking 2018. Hasn't taken out the highs. When we had that collapse, we're not even back up there yet. So small caps have been underperforming in a big way, and most of the gains we've had the last 4.5 months are only large cap for the most part. The diamonds, that's the DIA tracking ETF for the Dow 30, is bullish, all-time highs almost. A little bit of relative weakness for sure compared to the Qs and the SPY, but bullish. Here's the larger time frame, the monthly, all-time highs, way above the August high from 2018. So just wanted to show you all four indices just for your information, nothing more. My bias again remains bullish for next week. So with that said, let's take a look at some of the ideas that I have for next week. I will be taking 5 ideas on Tuesday. I keep saying Monday because I feel like today is Sunday, but obviously today is Monday, and I will be taking 5 ideas tomorrow. Will all 5 trigger? I don't know, but I will have 5 orders in the system tonight so that if they trigger tomorrow, I'm all in. If you're in the strategic swing trader, please feel free to log on to your account and to preview to see ideas, the entries, the stops, the targets, all of that is already posted. If you'd rather not do that, then wait for the email tomorrow at 8 a.m. Okay, you'll get it in your inbox. So with that said, here's some of the ideas. ASRT is doing a daily buy setup, gapped up a huge amount. So if it takes this out, then that will trigger a buy setup. Actually, this is like the IRBT. Big gap, and then pulled back, and it triggered already on Friday, but it's not too late still to get in it. IRBT, see that? Gapped up, pulled back, and now is doing a buy setup. Look at the hourly chart also. Not bad, not bad. ASRT, same thing. Between the two, which one do I like more? The IRBT, for sure. This has stayed right at the bottom, but again, if it takes out the highs, that's an entry. It's just a matter of, do you like it enough or do you not like it enough? Obviously, I'm not going to take, how many do I have here? 6, 7, 8 longs and then 12 shorts. I have to be picky. I have to be a little picky. I'm still going to take 5 if they trigger. CIM is on fire. Is a 1, 2, 3, 4. So this is the breakout bar, the inside bar, so 2 resting bars, and then if we take them out, it'll be a 1, 2, 3, 4 strategy entry. So over the highs right here, stop, you could give it to here or under this bar's low, the second bar's low, whichever you want. I would just put it right here. So this bar is 22.35, so that's under Friday's bar, 22.35, not the big green bar. So that's a 1, 2, 3, 4. Okay, on the CIM, like it, not bad. EFX is a 1, 2, 3, so that's 1, 2, and then if it triggers tomorrow, it'll be considered a 1, 2, 3 pattern. So just like the CIM, but is missing 1 bar. ELF is a 1, 2, 3 as well. I don't have, I didn't pick these 1, 2, 3 plays as opposed to like breakouts or pullbacks or other patterns. I didn't pick them, they just showed up, and so if they show up and I like them, I put them on the list. So ELF is a 1, 2, 3, beautiful actually, like it a lot, over 20 bucks, over also the whole number. Stop under 1950, the half number. So I like it, I like the ELF. G-Dot is a bit too late to get in it. This has been, this is a really nice monthly chart with that pullback, so I do like it higher to like 50 bucks. Minimum 45 I would say, which is over here. So I like it higher as a long-term play, but unfortunately it's a little late. The correct entry should have been like right about here. Now if you look at the hourly chart, that's not bad. Over the base right here, stop under it. It's an hourly buy setup with a rounding bottom, so not too bad still, but just a little late as a long-term play. Guild is very interesting. It's got a daily buy setup. That's a pullback after a gap up. A little sloppy for sure. But this is why Guild is interesting. Because, my friends, it's been basing for how many years? Let's count. All of last year. All of the 2018. All of 2017. All of 2016. So you can say it's been basing for 4 years. And it might just be ready to go back up. Okay? This is coming from a long-term uptrend. Had a 50% retracement from about 123 to 60. That's 50%. And it's starting to look like it wants to go back up. Will it work? Who knows? But if it does work, it'll end up being a long-term play. For me, at least. Okay? The Guild. So Guild is, I'm planning to play it. As you can tell, I'm planning to do that buy setup and consider this a long-term play. Will it work? Who knows? We'll see. Last weekend when I did the video, I told you about the TNDM as a long-term play. How's that working out? No jinx, knock on wood, but I like it. It's a monthly breakout. Now, if you're not in already, in my opinion, it's too late. You're late over $6 per share. So that's the Guild as a long-term play. The TGTX is a breakout on the daily chart. So the entry of this would be right here, stop right here. Okay? Nothing much to it. It's just a breakout. gapped up on Friday and didn't go anywhere. So if it's Friday's high, which is 1620, it should, in my opinion, continue higher. Has a beautiful weekly uptrend, so it should continue higher. I like it. And then TNDM, I was just showing you that play. It's too late now to get in it. All right, shorts, we have even more. ANET, I did it as an earnings play short, so I got in it on Thursday, covered it on Friday. Okay, why? Because if you look at the monthly, this thing has a really bearish top. A transition C on the monthly chart. Notice the 4-stage cycle. Stage 1, Stage 2, Stage 3 the top, and Stage 4 the downtrend. It actually does not have much support at all the way down to $100. Now, will it fall to $100? No, it won't, unless the market cooperates, meaning unless we end up with somewhat of a bearish market over the coming year or two. But if the market starts to come in a little bit in the future, then this is the best place to get in it, up here. And that's why I did it as an earnings play, and this was an official play for strategic swing trader members on Thursday. So we shorted here and then covered on Friday right here as an earnings play. But I still like it as a long-term short with an entry right here and a stop up here. Okay, so I like it as a long-term short. ANET. CCS, don't love it honestly, but it's a transition C on the hourly chart right here. Short, stop right here. Okay, it's a breakdown on the hourly chart. Not my favorite. CNX or CNX, not CNX. CNX is oil. CNX I think is chemicals or something like this. So CNX is a breakdown. I did this stock. I played this stock multiple times in the past as both earnings plays and regular swings. So take a look at that monthly. I mean, tell me this monthly is not headed towards $5 or so. Just look me in the eye and tell me this is not lower. Right? It's really bearish. It's really bearish. Oil also. So oil is very bearish. So under the base, stop above it. What I don't like about it is, first, I like to enter at or near the declining 20 when I'm shorting, at or near the rising 20 when I'm playing long. As you can see, that's where the 20 is. That's where price is. So it's about $1 far from the, below the 20. And then on the hourly chart, it's a bit, it's got a flat 20. I like declining 20, not a flat 20. But I still like it. I like the CNX lower. Also as a long-term play. DD is a sell setup. So the entry for this would be just under these 3 bars lows. So under 52.60, 62. Stop 53.87 right here. Does look lower, also long term. DO I believe is oil. DO we did also as an earnings play on this day. See that 1, 2, 3, and then it was going to report earnings. So got in it short at the end of the day, and next day it was a really big drop actually. It was a nice drop. And then it still looks lower, just like the CNX. But I like the CNX slightly more. Okay, GME is a sell setup. I was in the GME, so I did the GME 3 times. Once right here, short, stop right here. And then once I saw another base right here, you see this 1, 2, 3. So I did another short, stop right here. And then I did it bar by bar, so out right here. Fantastic trade, loved it. This was, again, an official trade for SST members. And then it went back up and gave us a sell setup. So I went back in it, short. Got really to target 1 here, but it went right back up and stopped me out. See it? So I got stopped out on that last try. The first 2 worked, but the last one didn't. And now it has another sell setup. I mean, GME looks lower. Short right here, stop just over this bar's high. Okay, on the GME, just an idea. I'm not planning to do it, tell you the truth. But again, if you're in the SST program, just log on to your account or wait until 8 a.m. tomorrow morning. You'll see which ones I will be doing. The 5. IAG is a 1, 2, 3 on the monthly. So I like this as a long-term short. Gold stocks have been really bullish. We did GOLD, this one, as an earnings play. And as you can see, it's breaking out nicely. So gold is bullish, very bullish. But IAG can't get off the lows. This is really bearish on the monthly chart. Weekly is also bearish. Daily's got a sell setup. So just under 97. stop over 309 as a sell setup and a long-term play as well. Current is a 1 2 3. I like the 1 2 3 when the second bar is at the bottom right here, so you know that's how I like it, not at the top. But Wednesday's gap, I guess, or Thursday's gap this day was really bearish because it gapped under a long-term base. So entry right here, stop up here, okay, on the Kern, if anybody wants to try it. Mobile is a breakdown. So mobile is, you know, here's the thing about mobile is that it's basing under a base, or you know, it's gapped down and staying below the base, so that's really bearish. All of this is basically now supply. Every single person that got in it and didn't sell prior to the gap is now underwater. So as soon as the mobile starts to break down, guess what? Their losses are going to get bigger. They're going to look to exit, which puts more pressure on the price, on the stock, to drop. And so I do like it lower under the base here, under the double bottom. So it would be under 438. Stop would be over 455 or so. Like it a lot. The only thing I don't like about it is if you look at the monthly chart, it has more support below, like at $4, at $3. It doesn't have what I call a tradable void. So that's the only issue with it, is that I feel it has multiple support levels below, so it might not drop that much. That's the only issue. Otherwise, I like it. MTW is had a tier 1 gap down, really bearish gap down, and didn't go anywhere because there was too much shock. That's what I call too much shock. When you gap under four green bars like this, people freeze. They don't know what to do. And on the next day, it dropped really hard, and then now it has a sell setup. In fact, it broke out on the hourly chart, as you can see right here. Broke out and then it failed. So this is a high quality sell setup with one minor exception. Do you know what it is? I'll tell you what it is. The size of the bar. The bigger the bar, when you have a sell setup like this, a breakout failure, the bigger the bar, the more bearish it is, but also the larger the stop. The larger your stop is, so the entry would be under this bar's low, 1267, stop 1365, so $1. The larger your stop, the smaller the share size. In fact, I'm going to be doing a lesson on this very specific concept tomorrow, Tuesday, tomorrow, at around 4:30 or so. We start coaching at 4:30, and then once we finish, then I start the broadcast with the lesson. So feel free to tune in tomorrow after the sometime after the close around 4:30, between 4:30 to 5. I'll be doing a lesson actually and broadcasting it live about this very concept of share sizing and what to do when the stop is large versus small. So that's tomorrow. I dropped a link for my Facebook playlist as well as the YouTube playlist. If you happen to be new to the show, feel free to check out the links in the description so you can see prior videos as well. All right, so this is a high quality setup but with a large stop, so we can't do too much shares, too much size. MYGN is a breakdown. I'm already in it, MYGN, as a short, but I like it lower still more to add to it under 1936. Stop over 2011. Okay? So I like it more. I'd like to add more to it. And if you look at the monthly chart, I mean, this stock does not look good at all. It looks like it's headed towards the prior lows for sure. Okay? And the prior low is $15, 15.15. So it still has another $4, okay, on the MYG, and like it a lot. I'm already in it, but it's not a bad idea to add to it, in my opinion, if you're already in it with me too, because this is an official play for SST members. SBH gap down and is basing. It does have a breakout failure, so here's the base, the pop, and then now it's gonna, if it breaks down, this will be a breakout failure. So again, here it is, and it'll be a breakout failure. So it's bearish right here. Stop right here. I like it lower. Target would be off the weekly, somewhere down here at $12 or so on the SBH. It's similar to the MTW in that you have a breakout failure on the SBH, but the MTW has a bigger target than the SBH. UI is a beautiful sell setup, high quality sell setup, but it's a low quality stock. It's a very wild spready stock. It's a thinly traded stock. Otherwise, it's a high quality sell setup. Short, stop and then could look to take half right here, target, but I do think this drops more to the rising 20 on the monthly, which is around here. Not sure where it's at exactly. Let's say it's around 123 or so, 124. So it still has another, let's say, 20 bucks on it. It's a high quality sell setup, low quality stock. Tell you the truth, I got in it right here on the breakdown. Didn't follow through. I lowered the stop, so I didn't take a full stop. I lowered the stop, got out early, and then on earnings probably had a huge gap down, but I was no longer in it. Too bad, right? That was last week. But I still like it lower. And then last but not least is the WTER. I guess WTER, don't really love it. It's a sell setup on a $1 stock. But again, it's a sell setup. Looks okay. I just don't love it. So I took it off the list. I'm not going to be doing it. All right, guys. That will do for today. I hope you enjoyed today's video. I think it's too bright in the background to see the view. I'm doing the video, I usually do it earlier in the morning, doing it a little late, a little lazy this weekend. I hope you enjoyed this long weekend, got some time to rest and relax, and hope you're feeling ready for another trading week this week, a short week, 4-day week. All right, with that said, thank you so much for sticking with me until the end. If you have any comments or questions, leave them below or send an email to info@t3live.com. Have a great trading week, and I'll talk to you soon. Take care, everybody. Ciao.